What is going on, everybody? And in this video, we are giving the state of the market and stock picks for June 15th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead. And a lovely Redfield market. Yes, we don't bounce in this market, not at all. But nonetheless, state of the market, what do we got going on? We all know from about to this point that we have the FOMC report and Powell tomorrow. So the report will come out at 2 o'clock p.m. Eastern Standard Time. Then you have Powell at 2:30 Eastern Standard Time to essentially fill the questions about what has come out from the report. Now, again, something we've talked about yesterday and the day before, everything has changed. The dynamic of the market has changed since last Thursday because of what has gone on with the ECB in their action to catch inflation, if you will. Now, our biggest concern and why we keep selling, why we can't bounce, is how high interest rates are we going to come in tomorrow. Now, there is a lot of reports. JPM and Goldman Sachs, I believe it was earlier today, came out with the fact that they think that the Fed will come in with 75-point basis move. Powell has said 50-point basis move unless they have a meeting and talk about it. So it's going to be interesting what kind of numbers we're going to get tomorrow. I wouldn't be surprised if we got 75. I wouldn't be surprised if we got 50. And if we do hit 50 or below, I think that could be a bullish catalyst to provide a temporary rally back to the 50-point basis move. So roughly, we're looking at mark somewhere around this area is around where that 50-point basis move. And if that's the case, and it does ramp up because of those rate numbers, just understand that the thesis that I am generating here seems to be working quite well. It has worked thus far, and hopefully it can continue to that you need to come up with your own thesis. You need to know events, understand economics somewhat is what's going on in the world. You're not going to be able to understand every little aspect of it, but I can definitely guarantee you, you'll know a lot of the headlines that are going on and a lot of the main events that are going on, what actually carries weight in the market by watching the market. You can come out with these theories and actually see them play out as opposed to just going off of supply and demand, because yes, supply and demand does work, but if you have a catalyst, that catalyst can blow through some of these supply and demand zones pretty quick. Yes, you can have risk management, but why even take the position if you know an event's coming up? And just wait until after that event is typically the way I play things. So that being said, tomorrow is the day, the big day, to determine what's going to happen. Again, if we come in at 75 points basis move, we're sitting roughly around this area. So I think what would happen, 75 basis is roughly around here. This could potentially be, even if you came from the bottom of the body candle here, we could have already hit 100-point basis move. That's roughly about 5. So if you're going off of the body candle, we could have hit 100-point basis move where we're currently sitting at. We're very close to that support, and something I've always said that typically if we're going to reverse, we'll get close to the support and then we'll pop. So more than likely, we could get a bullish catalyst, especially if Powell comes in at 50-point basis move or lower. But I do believe he's going to come right at par at 50 points. Again, I think the 75 is overdoing it. I think what might happen, though, is they might talk about it. Now, again, this is just a thesis, right? Nobody actually knows what's going to happen. A lot of people are assuming it's going to be 75 just because of what the core CPI that came out, and also because of what the ECB is doing. Now, being said, again, I don't think they'll come at 75. I wouldn't be surprised they do that. I wouldn't be surprised if they hit 50. But again, I think they're going to come in with a 50, and then that might be a bullish catalyst to push the market up. Maybe the people will believe. Again, you're going to have to let the market digest what information they get, because, again, it's not going to be how you and I interpret it. It's going to be how the market interprets it. And they might take it well, and the market might start ripping from that point. Maybe they feel that the government or the Fed are seeing something that we're not seeing, and they feel comfortable in sitting at a 50-point basis move. Again, we also have to remember the ECB hasn't raised rates at all. We've raised rates quite a bit already. So that may play into what's played out tomorrow. That maybe only right we come in at 54-point basis move because we've already taken some action. The ECB, I think, right now is playing catch up like we did, but we played a couple more months back. I think the ECB is starting to have that slow rollout and slowly doing stuff from that point. So it'll be interesting to see what happens tomorrow. But again, if you're going off of candle bodies, that we could have hit the 5%. This could be where the 100-point basis move is, roughly around here. And then if you go off the bottom tip of the candle, I mean, you're still looking at like 3,600, roughly, not even 3,600, around 3,630. Could potentially, if you're going from the lowest point before we started to rally, or if you go off body candles, right? So it's roughly around this point. So you're not going to be precise on this, but that's kind of my thesis is we're kind of in the area where it's going to reverse. So around this area is going to be where the 100-point basis move is. Again, I don't believe they're going to come in. They can always surprise. It's always something that could be on the table. They said they're not removing anything from the table, so that's very important to remember. So we could get a rally going into tomorrow. I thought we might have a bit of a rally today. The market wanted to go and it didn't. So it was still just held down. It was chopped a lot. And we have to see how we open. If we continue to hold, I think that could be potentially a good sign if we don't start pushing up, actually. But again, we'll have to see. Every day over the past couple of years, or the past couple of months, I should say, it really depends where we land, and then we take it from that point. This is why swinging is extremely difficult in this market, because you don't know where we're going to land the next day. So that being said, that's what we got for SPX. Again, watching this level. If we get bad news tomorrow, we're going to continue to sell down a little bit more into the 3,600s roughly. Could be a strong possibility, but I think we'll hold and then we'll start bouncing out of that. If we get bad news, we may start selling pretty hard. But my thing is we're getting closer to a bottom, because realize that every time we do get bad news and we try to sell, it pauses and then it starts pushing back up. So you're coming close to a bottom when you start finding buyers. So I'd be really careful if it does start selling. I wouldn't expect a straight flush. Now, if we popped it all overnight and started pushing into that meeting, or until we get the notes in Powell, then that could be a catalyst to sell us off to wherever zone they feel that the rate is going to come at. Where 75, I could almost bet that we'd be back here at the 39.12 tomorrow. If not tomorrow, Thursday, if that's what comes out. If we pop it all and hit this around that 4K mark, we could sell back down at this point, or we just gap up and just start running, and then we do good here and we kind of just stabilize. If for whatever reason we pop and start to consolidate overnight on Thursday, we could start getting a bigger reversal back up somewhat to some of these levels. You have to remember there's a shorter term trend line coming in here too. So we might get higher lows, and we haven't really been breaking out. Although every time we get some strength, there's always been bad news about more of a rate raise, and so we sell off. So, but I think at this point, a 100-point basis move is kind of what we're looking at. So at this point forward, I think if we ever need to go to a 100-point basis move, be looking at this level, the 37.35. Now, wherever we're at that point, are we going to sell back down to this level is what we're looking for. So that's primarily what we're watching tomorrow. As far as Bitcoin goes, been bouncing some. It looks just like the market. I think you're kind of finding a bottom here. It hasn't retested. You should get a nice rally and retest. Again, if it does, when it gets to this point and retest, it's going to get rejected hard the first time. As long as that rejection makes a higher low, we could be potentially starting to head back up. Again, Bitcoin and everything is it's not going anywhere, in my opinion. It's not going to zero. Biggest catalyst here is being inflation. So we have to see, again, Bitcoin is I don't think a lot of the selling would occur if if the Fed's had inflation under control, perhaps if they started rolling off earlier last year, if there wasn't a war, to be honest, I think we would have actually done, the market would have done well. And I think if the market would have done well, this would have been our bottom here and we would have just continued right on up. But then we had the war, added more supply chain issues. We were starting to do well with the supply chain stuff. And I think that's the biggest thing to understand too is I think, the thesis that Powell had, the thesis that Cathie Wood had, that it was transitory, I think was valid at a point until the war started. I think we were starting to get recuperate a lot of that, those issues with supply chain. And then what happened is that then we had the war that put even more strain on the chain right after we were just starting to get legs under ourselves. And then that just essentially just destroyed everything. And it kind of caused this sell-off because, again, once Feds have to start chasing rates, they don't care about the market at that point, and they're gonna do whatever they can to get a hold of inflation. The markets will go in shambles until they do. Once they get a grasp of inflation, the market will start pushing, having nicer rallies, and actually a stable push up from that point. So we're gonna have to see going forward. Again, every day is different. We're going to take a look at Tsla like we always. Actually, I want to roll down to the banks here. I've been talking about banks all the time. Banks have absolutely no footing. They've been struggling pretty hard. Try to break. Really, we want to see if this can come back up. The 115 mark tomorrow, we definitely want this thing to open up back above that and start pushing. If not, we could open below this and retest. If the banks start retesting and selling, I was talking about this the other day. If banks roll over, that's your first sign. Because Tech tried to hold it and it couldn't hold it. Tech doesn't have any footing. And so when the banks start rolling over and start selling, it's only seems like it's only a matter of a couple of hours, and then Tech starts selling off pretty heavy after that point. So just be mindful of that because you haven't been seeing a divergent, especially with rotation, that you'll have the bank sell off, and then shortly after you'll have Tech starts selling if it can't hold. So being said, JPM looks bad. GS looks bad. Again, you don't want it to break. GS, you don't want it to break 280 here. You want it to stay above and start pushing up. Again, you have some resistance here at the 292, so you want to make sure you can still break through that and push up. Bank of America, it looks really bad. It looks like it's already broken and starting to sell off. See, a lot of these banks don't look good at all. So we got to be very careful and very mindful of that. We could just potentially keep sliding. We might get to a state of panic, depending. I think that's what's really going to play into tomorrow too, is what kind of state of panic does the Fed bring? Is the Fed going to bring a state of panic, saying that, oh, well, we have to raise it to 75, or if they come in at 100, that could bring a lot of panic into the market. So even though we have it priced in, you have to understand once panic takes over, you have absolutely no control at that point. At that point, it just starts selling. And I talk about selling heavy. The chances of that happening tomorrow, I think, are very slim, but the chance is always there. This is what you have to be aware of in the market, that there's always a chance that one thing or the other can happen, right? One thing can say that the Fed come in extremely low for whatever reason, and the market could rally hard, or the war could end and the market would rally. Because essentially hopeful and also understand the supply constraints would put a big ease on that situation. Not that it would be automatic, but it would help alleviate a lot of the current stress on the current environment. So we got that Tsla tomorrow. Again, it's being held. It's held this 641 really well tomorrow. So I really want to watch this tomorrow. If it does continue to hold, essentially that 652 tomorrow, I might buy into this. I almost bought into this today, but I held off because of the fact that I knew the Fed is coming into tomorrow. And again, it could, if it does break this 630, or roughly around that 625 mark, if it does break that, this thing is going to sell heavy down close to that 500 mark. Otherwise, hopefully we can start trying to break back out. Again, we're going to cycle around towards the end of the month. Next month, I believe banks actually start having earnings again. If I can look here, JPM, they have earnings on the 14th, so next month. So we're about a month away from earnings to start back up. So just be mindful of that. So you're going to start getting an earnings cycle. So it'd be a perfect time for the Fed to come in. If they came in at 50-point basis move, we could potentially start rallying, to be honest, start getting ready for earnings cycle. And then once the earnings cycle kicks in, you're going to get a big move up, whether that's weeks beforehand. And then that's what we've been seeing, is that the rally has been weeks beforehand. And then from that point, the stock typically stabilizes and then might push a little bit and waits for earnings to set up. So just be mindful that might be very well happens. So I'm kind of watching that on Tesla, considering that Tesla might come in. Tesla's been reporting pretty early on earnings, not the week of banks, but like typically the week after that. So Tesla might be around the 23rd or 24th. So the end of next month, Tesla could be reporting, and they just came out with good numbers, production numbers. So just be mindful of that. So this could be turning pretty quick. So I may have to buy into this position quickly because of that, because of this rally. And then once that rally happens, again, you kind of cut everything out and just be patient, let it sell off again until after earnings, and then do the same cycle again. Also going into tomorrow, we take a look at SQQ real quick. This thing, again, it's been floating around here. It looks like a bull flag. It tried to break out multiple times today and still nothing. Again, all waiting on Powell. And I do believe we'll get a rally. And I think this thing can come back down. If it does come back down to 52, imagine it's going to have a big bounce off of that. You got a gap fill. It needs to fill here too. So you're going to get some sort of rally, and it's going to be fairly short, in my opinion. If it's not tomorrow before the Fed or after the Fed, I think it will be potentially Thursday, Friday. We might actually get a strong rally. This thing is sell off pretty heavy. So kind of watching that as well. And then you got Amazon not holding so hot. Google's consolidating. So this is good for the market in general that it's consolidating. Again, it's got a 10-for-1 stock split coming up as well. So you got more recession-proof, good name companies getting recession-proof. So it'd be interesting to watch. There's a lot of consolidation on here. If the market does decide to rip, now typically if we sell off, Google is one of the first to sell off. So the fact that it's holding very well is a good sign. People feel that the 2134 mark is a solid support. So start looking for this thing, because this thing start ripping. It breaks 2166 mark. You have a big gap fill to 2208. So watching that as well moving forward. That's pretty much it. I want to keep this short and sweet. A lot of it is more loaded up front, because there's a lot to be looking out for tomorrow with the Fed, how we open, what we do before, what we do after, how the market digests it, and going into tomorrow night. So a lot of it's going to be a lot of watching, reacting. If there's something that moves quick, again, if the market's still sitting in that first hour, if it's not pushing up or down, it is most definitely waiting for the Fed. Or if it starts to rally, just be mindful to take profit once that does happen, because it very well could start to sell off heavily later on with the Fed and what comes out. So we don't know what's going to happen. We can assume it's going to be 50. We can assume it's going to be 75. Again, they're both big swings right now. We're sitting around that, roughly around that. We kind of popped out of that 100 points basis move roughly. So we're kind of sitting roughly around there. So watch the market as this, like I've been talking about with my thesis, like if we go with a 50-point basis move, we're going to pop, because that's a big rally. If we pop to that 50-point zone, then if we are good with everything, the market digests it, we could start getting, it's probably a little bit too early, probably got another 2 more weeks before like a earnings rally, but start looking at your Teslas, your Googles, seeing where they're sitting at, and seeing as long as they're holding, could be a great time to be getting in positions for shares to help cover that, running into the earnings and getting that pre-earnings run up. So, that being said, if you made it this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.